Time to see what's on the radar. We are back with Brian Madden, Chief Investment Officer at First Avenue Investment Counsel, and we're going to talk about spinoffs. Brian, what do you like about them, or what intrigues you about them?
Well, Roger, if you think about what a spinoff is, it's really sort of the inverse of a merger or an acquisition. And so with an extensive body of academic research suggesting that the majority of mergers and acquisitions don't, in fact, create value for the acquirer, but rather destroy value, it's rather interesting to look at the inverse. And, if the logic behind a merger or acquisition is that the whole is greater than the sum of the parts, or there will be synergies of various types in combining businesses, but in fact, the empirical proof is that most of the time that doesn't happen. Does it then follow that sometimes the sum of the parts is worth more than the whole, and thus the spinoff makes sense? And so what we find is, not universally, but often that is the case. And so this is kind of topical because, and I hope it's not too soon for viewers to be talking about this in the wake
I'll just plug my ears right now.
Of the Blue Jays' epic World Series run. But obviously speculation has really been mounting with the bringing together of the majority control of Maple Leaf Sports and Entertainment under Rogers' ownership, possibility of buying out the remaining minority shareholder, and of course owning all of the Blue Jays altogether. That Rogers is going to be looking to surface value for their entire empire of sports franchises, and possibly as soon as 2026, with some analysts floating a possible value of $15 billion for all these franchises. So, we think these create, and you have to look at them all individually and think about the underlying rationale as to whether they're going to pose a good opportunity. But broadly speaking, the logic for spinning off an enterprise from a parent company is that there's hidden value to be surfaced that's unrecognized in this conglomerate holdco structure.
Is there a season for it, or a time for it? Are we in a market that people are looking, maybe it's time to start spinning off? We're seeing some mergers and acquisitions, but are we going to start seeing spinoffs with the way the markets are right now?
Well, I think the gravitational pull, and perhaps this has got something to do with the incentives of investment bankers, tends to be more towards mergers and acquisitions and less towards spinoffs. So, in order for a spinoff to happen, sometimes an activist shareholder will get involved and agitate for a company's board to do something because they think the shares are undervalued, the company is being mismanaged, and that you could realize that value or have the market realize it with full price discovery if you were to spin off the entity as a separate trading vehicle. But the industrial logic is, there's many different variants of it, but usually it's something to the effect that, you've got disparate businesses and one is slow growing and the other is fast growing, or one tends to be capital intensive and the other isn't. And so you should set them up with their own currency for growth capital expansion or acquisitions of their own. And then the other piece of it is you create a more direct drive incentive for the managers of that unit to realize value for their shareholders than you can in a larger enterprise. And you do that by giving them executive stock options in the pure play vehicle that they're running. So I should sound a note of caution. These don't always work.
Yeah, I was going to say, what's the success rate for them? If you can.
We think more often than not, they do tend to create value because there's behavioral inefficiencies in the market to be exploited. And so, you got to look at them all one by one. And sometimes there's an optimal time to accumulate these shares. Sometimes you want to buy the parent co before it spins off the enterprise. We think possibly that may be what's happening now with Rogers shares re-rating and trading at a premium to its peers, reflecting not necessarily superiority in the core business, but rather the unrealized potential that might be unlocked if they do spin off the sports franchises. But then it can go the other way too. And, as will be known well around here, BCE spun off Nortel Networks to its shareholders when Nortel Networks, this was in May of 2000, became just such a gigantic behemoth that it overwhelmed the core business in terms of the valuation of the BCE shares. And of course, we know how that story ended. Obviously, BCE went on to much greater heights and Nortel went to zero. So you got to look at them all carefully. Other precedent examples from a bygone era were, and maybe I'm dating myself in pointing this out, but CP used to be a big conglomerate comprised of what ended up being Ford and Coal, CP Ships, Fairmont Hotels, CP Rail, Pan-Canadian Energy, which I think then further bifurcated into Cenovus and Encana. And many of these things went on to themselves get acquired. So that's the other catalyst for when an entity spins off a subsidiary. It makes it more sort of ready prey for a strategic acquirer, which can then pay a takeover premium. So there's lots of ways to win with these. And other times we just see the company management teams want to go off and do their own thing. We often see that with resource companies. They'll spin off an Explorco of exploration assets for the executives that like to drill, baby drill, and they let the incumbent management team manage the producing assets. Or in another realm, Constellation Software, a vertical market software consolidator, spun off several entities in the last couple of years, like Topicus and Lumine, to give those executives a bit more free rein to run their own public companies, and they've both done quite well.
Okay, so you and I are going to buy the Jays and the Leafs then? Be like the Green Bay Packers. Right?
I'm in for the Jays. The Leafs.
It's a toss-up. They won last night.